The third quadrant is a very interesting and important quadrant. Recall that we were discussing about the moving averages, Bollinger Bands, and RSI. They are all price-based indicators, which means they track how the price moves. As we saw in the Tesla example earlier, going by pure price-based indicators leads to painful losses. Remember, this was a chart where Tesla moved from $201 all the way to $256 in just about a month. That's because you saw in the Bollinger Band, it was on the upper end of the Bollinger Band, the RSI was overbought, but the price kept going up and up and up. This is exactly the problem that we are going to fix using monkey bars. They are actually the least popular and probably very important. Very few platforms have monkey bars in their analysis tool. Thinkorswim is one of them. Just to put it simply, if price-based indicators like Bollinger Band or RSI are like X-rays to detect problems with your body, think of monkey bars as a 3D MRI. Much precise, much better. Another thing about monkey bars is that I was actually in a TD Ameritrade Market Drive event a couple of months back, and even the employees of the company had very little idea of what market profile is or its significance. Think about it. If everyone starts following an indicator, the indicator starts losing its relevance. So as of now, the monkey bars is still one of the good indicators because very few people use it. First, let me show you what a monkey bar is and then show you how to interpret the results. So here we have a monkey bar chart and I'm going to expand it and then so this by itself does not mean much. I'm going to show you what it is and then we can go from there. So if you see in the monkey bar, you have a series of numbers. It is 1, 2, 3, 4, 5, 6, 7, 8, 9, and so on and so forth. So basically all it says is each vertical line represents about 30 minutes of trading. So this is, let's say, at morning 9:30 EST all the way to 10 o'clock. So basically the stock price opened at about 237.4 and went down to 237.3 all the way up to 238.2. So each number, so basically all the one represents 30 minutes of trading and what price it traded in that 30 minutes. So in this case, it traded between 237.3 to 238.2 in the first 30 minutes. Similarly, now you have the next half an hour, the next half an hour, the next half an hour, and so on. So once it goes past the 9, then all it does is the color change is nothing but it represents the afternoon time frame. So what are we getting? So basically, monkey bars give a three-dimensional view of price, volume, and time. And with that, the possibility of successful trades dramatically expands to enviable rates. So now I'm going to compress this. Instead of having an expanded monkey bars, which really doesn't make much sense, I'm going to compress it and just show one day. Each one is a day. So in this, you notice there's a gray area, and let me just go to the slide again, that's easier to follow. So in this, I have marked two important points. One is the value area. If you notice it, there's a gray zone and this gray zone is called the value area. And what does a value area represents? If about 1 million shares traded on that day, 70% of the trading happened within this value area. The value area is where about 70% of the trade has happened. And within the 70%, it was this price where is the purple line, which is called the point of control, where the highest amount of trading within the value area happened. So that's at a simple level. Value area is where you have a 70% of the trading happen, and then you should remember the word called point of control, where within the value area, point of control is where the highest amount of volume traded. The next one is that occasionally you will see something called a buying tail. But before going into the buying tail and other details, I want to just give you a small example. Let us take an example of a store selling iPhone for an ultra low price of, let's say, $300. What happens? First things, everyone rushed to the store and quickly the phone is sold out. Next thing what happens, the guy who bought the phone for $300 is going to look around and he finds a buyer for $350. He's going to sell it and make a profit of, let's say, about $50. The buyer who bought the phone for about $350 now finds another buyer for $375 and he sells it, and the cycle goes on and on and on. So let me just show you that how we can relate that to the stock market. So now here let us say this is an iPhone advertisement. So what happens is the price has been dropped. Once price has been dropped, lot of buyers come in and they buy it, and at, let's say, this is where the person bought it at $300 and then he sold it to somebody at $350. The $350 guy looks around and now sells it to another person for $375. So now what happens is the price keeps moving up and up, and at some point of time there's an equilibrium where at about, let's say, at about $500, $550, there are enough buyers and sellers, and that is what you see it as a value area. So in a nutshell, when the price drops, quickly there are buyers who jump in, buy it, and move the price up and up. And at some point of time, an equilibrium is established, which is the value area. Okay, now let's take what is, if that's what happened. Now let me go back to the chart and show you. So this is what has created a buying tail. When the price has dropped substantially, now the price quickly goes up into the range. That's because the price as perceived by others are very cheap and everybody started buying it. Now the next thing after the buying tail is the opposite of it, which is a selling tail. Here is an example of another chart where what happened is the price, somebody has bought it and the price is at, let us say, $1,000 for iPhone, and now the person who bought the iPhone for $1,000 is most likely want to sell it for $1,050. He cannot find it, so now he has to take a loss and sell it for $975. He finds a buyer for $975, and next thing is the $975 buyer cannot find another buyer to buy at $1,000. So he keeps dropping the price, and the price gets dropped down to $950, $925, $910, so on and so forth, all the way till some sort of equilibrium is established. So this is in a nutshell what happens in a monkey bar, that accurately monkey bar captures that mindset. So this is not captured in your Bollinger Band or RSI. So in this scenario, we can see basically what a monkey bars help to act based upon what is called as market generated information. In a simple sense, let's say a coach prepares a strategy for a team. Beforehand, they have a plan as to how to attack, how to defend, and so on and so forth. And let's say in the middle of the game, one of the players is injured. He has to be taken off in a stretcher. Now, immediately the coach has to readjust his plan and play accordingly to win the game. And that's exactly what a market profile tells us. In a real world, if you look through the regular chart, you won't see this psychology that can be accurately read from the case. So in this scenario, let us say, so basically the price was somewhere here, and the bidders felt that it was too expensive. The price dropped, and you have value area established. And all of a sudden, the price started going down. Immediately, everybody jumped in and said, "Oh no, no, the price is too cheap. I'm going to buy more." So now this price goes up, and here the price went down to a point where you have a equilibrium, and that is the value area. I hope you are very clear with this value area and point of control. It's pretty simple and yet very, very powerful. I just also discussed about a buying tail, and the converse is if it was the same, these are called single prints. If the single prints, so if the single print is there, then it's a buying tail. Now, sometimes what happens is this was the day before price, and the next day for some reason the stock shot up. This is forming a gap. A gap is considered to be a hidden buying tail. Similarly, if the gap had formed here somewhere, it's going to be a hidden selling tail. A gap is considered to be a strong buying tail. As I was showing, this is a selling tail. So now we have gone through the basics of monkey bar and how to interpret and get a good idea. I'll take it in a separate video. Happy and safe trading, my friends.